All right, welcome back, investors. This is Invest Info, episode 20. And this week, I want to speak about should we listen to stock analysts in terms of stock investing in the stock market? Should we go based on what analysts tell us to do? And as below, you can see, and this is a clear example. Below is the position that I'm holding in Invesco Mortgage Capital. Yes, I'm an open buyer, but I'm not advising anyone to buy it or anything like that. Just want to give an example. 2 lessons ago, I spoke about mistakes, right? And the position was down. It went all the way down to negative 27,000, and now it's up to negative 19,000. But overall, the stock went up about 8,000 in the position, over I think like 18% in the past week. And now analysts are saying buy real estate and natural gas. Now Carl Icahn says the key to investing is buying things people don't want and selling it to them when they want it. And with that said, I want to tell to you guys to beware of stock analysts, beware of what they tell you to do, because these guys, they have no stake in the game, right? A lot of them that are on TV cannot own stocks because they're giving advice on stocks, so they can't own any stock. So they could be manipulated. They could be bought and paid for. They could have you could have short sellers that tell them to downplay a stock, and you could have people that have call options to tell them to up a stock in value, because these hedge funds, they don't have the same mindset or advantage that we have, where we could sit and wait for companies we understand. These hedge funds, hedge fund managers, they have to show how well they're doing per quarter, which is about 3 months, right? Which is very short. So it's in their best interest to have results quickly. So they do swing trades. They're in and out of stocks, and they manipulate analytics on stocks. If they want to drive a stock down, they could tell you false news about it. Now, our job is not to get caught up with that. Our job is to do our own due diligence, understanding what we own. Are we buying something under its book value? What's the future? What do we see the future intrinsic value of this company being? That way, if the stock shoots up, we don't get caught up in the selling hype. We know what the value of it, and if the stock plummets, we're excited. If you're investing in the stock market based on a tip that your friend gave you, a tip that you heard on the bus or the train, then you're not truly investing. Investing, according to Phil Town, Warren Buffett, is pretty much buying $10 bills for $5 with a high degree of certainty that we're going to get a return on our investment. So in short, you're going to hear all types of things. We have the election going on, which is not yet final. It's not yet officially final. So the markets are moving off of that news. The markets are moving after vaccine news. Now, a lot of people that are invested in Zoom, for example, that rode the wave up and part of the trend, well, what you going to do when there's no more Zoom meetings, right? Or if we're not big on movie theaters, not a movie theaters open, like movie theaters open back up, and it's running up, you're going to buy movie theater stocks now. It's like, so investing in trends, investing in hype, investing in stock analyst is not true long-term investing. One, it's very active, and activity is the enemy to invest in, as Charlie Munger say. The more active moves you make in a stock market, the more chances, the increase of making more mistakes, right? Think about it. The longer you play poker, right? If you play a game of poker, the longer you play, do your chance get increase of winning, or do your chance get increase of losing? So buying, holding, things that we understand for long durations of time is our goal, all right? Not being manipulated by the media, not being manipulated by, it's not about being really contrary, going against the herd or going with the herd. It's just, is our facts correct, as Warren Buffett said. So I still see the positions I have. This is just one. I still see the trend of them growing. One stock, I'm not going to share it, that we're bullish on, it fell 20%. And I got excited. But if you don't understand the value of that company, and you're just following trends, well, you're going to sell it. If you go based on what an analyst say, you're not going to, I'll close with this. Once, I believe Jon Stewart said, if he listened to CNBC for stock investing, he would have made $1 million starting with 100 million. So I think that sums it up. All right. So I'll see you guys on the next one, and stay and stick with the things that you understand. All right, see you on the next one.